Hi guys, Cole from the Two Traders here. I'm going to look at technical analysis. We're only going to go into the basics because this is the first part of the course, and as the course builds you'll get more in depth and we'll look a bit further, okay? So there are two micro methods to analyse, okay? Technical analysis and fundamental analysis. So fundamental analysis, study of supply and demand, okay? Technical analysis is basically price action, okay? So although fundamentals are ultimately what moves price, what we've got to think about is actually it's impossible for us to know all the fundamentals that affect price at any given time. Okay, so by the time news reaches us, you've got to think of all those other people, your big banks, all these kind of people that will have that news before you. So it makes it near on impossible to actually trade because the market will have moved, and so we're getting a lag. It's kind of a lagging indicator. Okay, so what we need to look at is how we could possibly tie technical analysis in with that, or you can trade technical analysis and price action, and you'll find out why and how it works. Okay, going through this course. So the four key reasons why technical analysis works. So when we look at smart money, okay, the big players, hedge funds, banks, governments, they can't hide their movement. Okay, they might be better informed than us, but their buying or selling is directly reflected by price. Okay, so we see that on the charts. So this means that using technical analysis, you will often enter a position before the fundamentals become obvious to regular traders, because you're going to see their movements. You're going to see the big players move the market, and then maybe half an hour later, you might hear some news or anything like that. But you're already into the markets. You're ahead of time. You're ahead of the regular traders as such. Okay, the market discounts all fundamentals in price. Okay, meaning supply and demand will be reflected by the price eventually. This quote I like: "History does not repeat itself, but it does rhyme." So basically, although price action will never repeat itself exactly, you do get patterns. So you can never fully expect price to just bounce off of supports and resistance, because then you would be in a range forever. That would just be a continuation of a range. But some of those levels it will repeat. Okay, it will repeat off. So not all of it, but some of them. Fourth one, which is probably the most important point here. Markets move in trends, and they're more likely to continue than not. Okay, if we're looking for reversals, etc., then we need to look for something in that reversal rather than guessing. And you're going to learn all about that throughout this course. Okay, so let's go on to the next part. So what we're going to have to look at here is understanding the governing patterns in technical analysis trading. Can be a great asset in either systems testing or when actually trading for profit on the live market. So if you're able to use patterns before everyone else notices in the market, and you've gained your edge over your competition, so your regular traders, you've gained an edge. Okay, and looking at the patterns, looking out for patterns at support and resistance, maybe double top bottoms, which are showing kinds of exhaustion, signs of reversals. Yeah, looking into these, trying to get your edge before they happen, before those breaks happen. Get into the market. So let's have a little look here. So support and resistance levels are simply historic price points. Okay, price tends to not exceed the level, but it can break through. It can break up to the upside. It can break through to the downside. Okay. What we want to do as a trader, we can buy at the initial breakout point. So you can position yourself before everyone else begins to buy and fuel the move. Okay, so in this case here, a small profit could have been taken as more and more traders realise the price has exceeded normal level. So we've got the breakout. We could buy into here on the breakout, and we're already in. So as more people get in, then the move exhausts itself. We lose the buyers and we come back down. But you've already taken your profit out of this move. So this could have been, we could have got in on that breakout, and then the news may have come out here, for instance. Okay, so that's what we mean by news could be. It's a lagging indicator. We're better off trading the technicals. Price is showing us what is going on in the market. So let's have a little look at head and shoulders. So head and shoulders is it's a more complicated than support and resistance. Okay. But it's very, very clear to see on the chart. Now, it's not going to be perfect. You're not going to get, you can see here, it's slightly different each side. Okay. What this normally means is this head here is the final piece. That's the final buyers that got into that market before the market decided to sell off. And then we had some more step in here, come back up and drop down. So what we've got, the left shoulder, we have the left shoulder come up, down. That creates the first part of the neckline. We come up, we create the head. Head's higher than the left shoulder, and head will also have to be higher than the right shoulder. The neckline then goes across. We've got the neckline here, and then we have the break of the neckline. So to gain our edge on this, on a pattern like this, for instance, we can sell on the first break. Yep, we can sell on the first break, and there's also another opportunity to sell on a retest. Okay, and there we get our edge. Okay, so we're already into the, if we get in here, we're already into the market in case it continues down. But when it comes back, we look at the price action that's going on, and then we can sell again. Sorry, I'm just stopping all of that beeping going on there. So let's take a look at a real example of a trade that was taken by our system that we teach. Okay, and the good thing about this is you can trade this kind of move without too much understanding of the market. It's always good to have an understanding of what's going on, but this is a simple breakout that we teach in our course. Okay, and what we're finding here is you're getting a good risk to reward. So you're going to find out about risk to reward as you go through our course as well, of 1 to 43. Okay, so $20,000 for a $500 risk. So let's have a little look at what's gone on here. So we can see here we've had this move down, and price has pulled away quite steeply from this level, creating a first support. We then hover up. We've got buyers back in the market. Sellers then step in off of this double top, and we come down and we test again. However, on this occasion, here we pulled away. Here we don't pull away as strong. Okay, it's a lot shallow, a lot more shallow, that move. Then we get a break. Okay, so what we're looking for in our system, which you're going to find out about, is if you're looking for moving averages for the crossover for a sell and a break of the Bollinger Band. So on this occasion, we've got the cross here, and the first break of the Bollinger Band is here. So that would be an automatic sell. Now, there's a few different ways you can exit a trade. One of the best ways on a daily time frame would be a moving average crossover. So let's go down and have a look and see what actually happened on this move. So this part here is here. Entry, this is a break of the Bollinger. And we can see the market is spiraled down. It's continued down. But what we've got here, we've got no cross of a moving average. Okay, the first cross of a moving average is down here. So we can get out down here. Okay. Or we can use a touch of a moving average. There's many different ways to get out, and you're going to find that out throughout the course. But this was a lovely move, and we can see here profit 25,000 pips, or 26,000 pips. Risk reward 4,331. So what we're looking at, you're going to find out all about this, is what you're risking to your reward. Okay, it's very, very important in trading to make sure that your risk to reward is correct. Okay, and your money management as well. So yes, this is a fantastic example of a move. These don't happen all the time. Okay, but the good thing about them is these are the kind of moves that can really make your year. Okay, they can really give you that. You catch one of these, two of these a year, your profile is gonna you're gonna be in massive profit. Okay, so you could essentially, what we're saying in our course is you could lose 20, 30 trades, but your risk to reward on this one's 43. Okay, so you can lose a lot of trades, and one can make money. That's why it's so important. Right, so what we teach in the course, you'll get a set of rules. Okay, we can teach you how to use sets of rules, make up your own sets of rules, and essentially what you want to be doing is testing them for a good period of time. Yeah, so you don't want to be chopping and changing your rules. Keep hold of them. Give it time. Give it a little bit of time. If you're losing a couple of trades, don't worry about it. It's more important to trade correctly and give your system a bit of breathing space. Okay. So here's an example of some of the fantastic traders over the years that have actually turned some of them small amounts of money into large amounts of money, and you'll find a lot of them compound their profits as well. So Richard Dennis, you can see that 200 million he made in 10 years, starting account of $1,600, and he went on to teach a lot of traders as well. So guys, I hope you've enjoyed that section of the course, and I'll see you in the next section. Thanks a lot, guys.